This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's shift to the gold market as usual. On the gold market situation is also intriguing, since market finally has started the bounce that we have discussed. Since as you can see, that market has hit the minor target at 618 of that ABCD large pattern, and as a respect of this hitting of this target and passing for these lows, some respect of this area could follow. But as we said, if market is really bearish, because this is the minor target, this respect should not be too extended to the upside. The level that we prefer to see, at least as a reversal to the downside again, the level that should hold the price action should be right here, 1280 approximately. And take a look, weekly pivot resistance 1, because we know that weekly pivot resistance 1 works as the edge. If it holds the price action, we could say that former trend is still valid, and that is just a retracement. If market passes through it to the upside, this becomes the warning sign that the trend that market stands with could be under question, and that is the hazard for the possible trend. This will be unwelcome sign if market will pass through the weekly pivot point. From the Fib work standpoint, if even retracement will be right to the 618 Fib resistance of that level, and that in fact the confluence significant resistance level 3006, 3010, that will not be the strategy for the bear trend. But this is just a bit the event that could make investors nervous, is market will proceed too far to the upside. The preferable scenario is that if even market will pass through the weekly pivot point, it should show some reversal pattern on the forward time frame chart in this area. That will be just the perfect combination from the bearish point of view. Also take a look, guys, that price is approaching to the MACD predictor, and appearing of the stop grabber here that will suggest taking out of these lows will be more than just welcome from the bearish point of view, of course. So if market will show some splash up and hit this level and turn to the downside, will form the stop grabber. That will be in fact the perfect combination of patterns that we would like to see, and that will give us the confidence when taking the short position. But meantime, as this bounce up just has started, we just will today hardly we will start to do anything, at least on the daily time frame chart, because first we need to see the ending point, the final point of this retracement, and we have to catch some reversal pattern on the intraday charts before taking the short position, because currently it's very difficult to say even where this retracement will stop. If market will pass through this weekly pivot point, the next area, the logical area to watch for will be right here. But since, as you will see on the hourly time frame chart, as market just has formed the initial swing up, we do not have any patterns just yet that could suggest where retracement could finish. For instance, if we could get some sort of the ABCD pattern that could give us say a bit more definite where we could expect the final point of the retracement. But since this is just the initial swing of the retracement, currently from the daily perspective, daily chart perspective, we just now have to wait and see what will happen. The scalp traders, I don't know, personally I hardly will take any long position right here on the gold market, but if you're a scalp trader and such possibility for taking the long position and you expect that market could continue move really further, keep an eye on this level, because 1245 is the confluence support on the hourly time frame chart, and take a look. That is the classical classical support resistance. You can see this previous consolidation area, so that will be not bad support in general. The market could start to form some sort of the ABCD. That also could happen. By far you can see that market has tested the weekly pivot point, moved down, and now take a look, it's forming the bullish stab grabber. So this pattern hasn't been confirmed yet and hasn't formed yet because that candle is not closed yet. But if the stab grabber will be formed, that will suggest that market will take out of these highs. Also, guys, a final moment on the gold market is that, in fact, move to the upside is the reversal swing, short-term reversal swing, because take a look that this swing up is greater than previous swing down. When the market forms the reversal swing, it very often, as a rule, even we could say, even as a rule, that market shows deep retracements because the previous momentum, bearish momentum, is pressing on the market, and that momentum just doesn't let it freely accelerate to the upside. The pressure of the momentum of the previous bearish momentum forces the market to show the deeper retracement. That's why among the traders there is some proverb that take the first ABCD and go, because after the reversal swings very often market shows the compounding retracement, some kind of the ABCD or something of that sort. That's why we should, if you are really bullish and would like to take some scalp long position, watch for confidence support or even maybe even 618, who knows. But in the very short-term perspective, within a couple of hours, keep an eye on this potential stab grabber and possible acceleration to the upside. Well, that's in fact all about the gold market, but our major focus, our major attention should be stick with the daily chart and the development of this retracement, because this is the daily research and we treat as the trading chart the daily time frame. That's why from the daily perspective, we should not take any long positions. We should wait when the retracement will end, then we drop our time frame to the hourly time frame chart, okay, and watch for reversal patterns wherever it will appear, here or maybe at the weekly pivot resistance and Fib resistance on the daily time frame chart, depending on how this retracement will develop. As we will see some, we will start to think about the taking the short position, since markets really could continue move to the downside as we suggested in our weekly research.